Welcome back. So this is going to be my full technical analysis for the commodities market and the precious metals market for Monday, November 30th, 2020. So we'll start by looking at the US dollar. And as you can see, we have been depreciating for the last 2.5 weeks. We have broken through the very lows here, and we basically ended up below the very lows. And that is a very big warning for this market because it could fall significantly lower. If you look at the next support areas for this market, it's all the way down here. So this is at 90.81, and other ones are down here. So all the way down to 88, and then 87. And that means if we fall from this area, we will see the price of gold. It will go up, but that's not really expected at this point. We'll see at least, especially oil, for example, it'll probably go to 47.5 and to 50 if that happens. However, there is not a lot of room to the downside at this point. We are at 34 at this point, and we are almost at oversold position. And these technical indicators are still fairly bearish, so we could go lower. So just keep an eye on the US dollar index, especially for those that are holding oil contracts. That is, if you are a selling position, like we did on last week, this could be a warning sign that oil could go higher from here. So keep an eye on what happens in the US dollar index. So we'll start by looking at oil. So oil has been rallying from the beginning of November all the way to last Wednesday when we hit 46.21. Then we broke down again. We started selling here. And the reason why I started selling here was because I first of all wanted to target 43.68. We'll see how that goes. I still have faith that we'll basically go down to there. If that breaks, then of course we'll go significantly lower. We'll basically target the 50 moving average. So at this point, if we rally above the candlestick here from Wednesday, then we'll most likely go to 47.5 and then to 50. And then we'll have a range of 50 to 40. And that's a $10 range, and that is a very normal range for this market. We could also say that this range here, which is the 35, and the 50, which is a $15 range, which is also very common for the oil market, could be our new range. So, but that means that we have to rally up towards the 50 first. It could go down here and then rally up towards the 50. That is also a possibility. So all of you that basically are holding short, as me as well, that are holding a short on this market, my guess is that my estimate is that we're going to touch these previous highs, and then we'll head towards the 47.5 and then the 50. So it may well be that I will enter buying here if we see that happen. So let's look at natural gas. So my hopes for a rally in natural gas, they have faded significantly when I saw this candlestick here on Friday. I was considering entering a selling position here because it is fairly clear to me at the moment that we are doing lower lows. So this is the first one, second one, and we'll probably head down towards 2.5 now, which will be the third one. Then we'll probably rally again, and then we'll head down towards the 200 moving average if we can get there. So it depends on the weather conditions. If it's cold in the United States, then yes, this market will rally. If it's technically cold around there, then demand for this commodity basically increases significantly. We have to get through 2.69, that is basically these previous highs and these lows, in order to go to 2.5. But this is not an encouraging sign. We rallied above the 50, broke down again, and now we're trading well beneath the 50 moving average. These technical indicators are all looking very bearish at this point, so don't expect a massive rally in this market. This is not indicating that we are going to go higher in this market. It is indicating that we are going to go lower. So a break here opens the door to 2.5, a break there opens the door all the way down to 2.2. So let's look at copper. So the copper market is one of the markets that just hasn't made any sense, to me at least, for the last month, basically all the way down here. So I did not expect copper to rally. I expected copper to basically decline. However, I think it's the Chinese market that is basically keeping, or Chinese economy that is keeping this market rallying constantly. But at this point, we are, again, significantly overstretched, overbought. 76 RV and RSI. Technical indicators are all still very bullish, apart from the stochastic, which is basically flat at this point. So I would not be surprised, but I've said this many times. I said it here, and I've also said it here. I've tried to short this market 3 times. I've been unsuccessful 3 times in shorting this market. And now it's just, should we try again? Maybe. These are the new contracts that are now, and I just don't, I didn't see this market rallying here or here or here. But so maybe if you see a really negative candlestick here, that may be a sign that we are going to head down to 3.25 and probably to these previous highs here of 2.21. I don't know. I've been. This is not a market that I'm very interested in at the moment. I haven't been for a while. It just make no sense whatsoever. If we manage to break all the way down to the 50 moving average, similar to this, then there is probably a buying opportunity, because clearly this market is an uptrend and it does not want to fall 1 inch. So let's look at gold. So I've been waiting to make that trade for a very long time. However, gold is probably going to drop significantly further. So on Friday, we broke through the 200 moving average. We went all the way down to 70.73, and that is as low gold has been for all the way back to July. We have been in a downtrend for a long time, all the way since the beginning of August. We hit the highs here, and then we started declining towards the 200 moving average. We have broken through the 200 moving average, and when you consider that the US dollar index has been depreciating in the same period as the gold has lost its value, if the US dollar starts appreciating now, this will fall all the way down to 700. So that's all the way down here. That's the previous highs here in April, May, in June. And we probably go even further than that. The next target is down here. It's at 1600, around 1600. So this is not a market that is, not bullish. And it hasn't been bullish for a very long time. But I expected a rally here because there was significant support here. But that significant support basically broke. So at this point, it's just a matter of seeing where this market ends. How far can it actually fall? Technical indicators for this market are fairly bearish at this point, but you have to take into account that we are almost oversold. So there are going to be rallies, but it's not going to be, most likely not going to be rallies that are going to break these highs. It's going to be rallies up towards the 200 moving average and then continue downwards. That's what we are most likely going to see. In probably 1 or 2 3 weeks, we're going to see the 50 moving average going to cross the 200 moving average. And we haven't done that cross for a very long time, all the way back here in 2019. We basically had this crossing of the 50 and the 200 moving average. We'll see if that happens. We could also see something similar to this, it getting very close and then rallying again. And that, of course, will be a sign that the 50 moving that we are not prepared to go lower in this market. So keep an eye out for the crossing of the 50 and the 200 moving average. But at this point, no interest to basically enter this market whatsoever. I just need to see how far this market will go. So let's look at silver. Silver is in a very similar situation. We are running into support here at 22.67, and it will most likely go lower. There's a room to the downside in silver market. The technical indicators here are looking fairly bearish at this point, so we'll probably go all the way down to the 200 moving average because this will follow the gold market. If gold falls, then silver will fall as well. So I just stay away from this market. We'll probably find support here at the $20. But if we break the 200 moving average here, then this will fall even further, similar to gold. So next on our list is platinum. So platinum has rallied. Last week, been really choppy ups and down in this area here of 971 and down to 945. At this point, I think that we are going to see a fall in this market towards 900, and that will also coincide with the 50 moving average. So this will be a buying opportunity for platinum if it falls towards the 900 level. So we'll have a stop loss underneath here at the 50, and we'll target these first of all, this high of 971, and then the highs here of 1004. That is the plan for platinum, but it will probably take a week, week and a half, maybe 2 weeks in order to get this market down to where we want it to go. So if you look at Pallium, so I did miss this market on Friday. There was quite a lot going on, and this happened really fast. But this was a market, I hope somebody caught this market, because I was basically trying to give a signal for several, almost weeks, nearly 2 weeks, that this was a market that most likely would rally to the upside. And in this case, it will rally further. It will probably go and test these very highs, so 2.5 to 3. But it's not a market that is interesting to enter now. You should have entered it here when it rallied. But now it's kind of late. It's basically in the middle of this range between 2.5 and then 2.3. So hopefully somebody caught this market and started buying, because it was a very good opportunity. At this point, I'm just going to wait. If we can, if we break these highs, then we are going higher. Then that is a buying opportunity. If we break down towards the 200 moving average again, then I'll consider again whether or not in order to buy into this market. Otherwise, this was a good opportunity to buy. So, Aluminium. It continues to rally. We are testing these previous candlesticks from 2 weeks ago, and last Friday should be, and we haven't broken through yet. We are on the edge of being overbought, so a pullback towards the 50 is what we're waiting for. What I'm expecting is a pullback towards 1.9. I don't think this market is going to go lower than that. That is a round number. That is also where we had these previous resistance support levels, and we'll also have the 50 moving average moving up this way. So 1900 is entry point with a stop loss around here at 1839, and then we'll target these highs in the beginning. So that is my plan for aluminium. So let's look at nickel. Nickel has rallied, so it did not do what we expected it to do. I wanted nickel to basically go and break down. Instead, it broke up, and still, this is not a market that you should enter. You need to wait until it gets down to this area here, 15.54, in order for it to be a a valuable trade. To trade it here, to buy it here is just too risky. To sell it just makes no sense at all. A pullback towards the 50 is what we're waiting for, and then rally from there. So if you look at sugar, we can see that we are getting really close to our target. So our target is here at the 0.1443. That will coincide with a 50 moving average. And at this point, I think the sugar market is going to go, it's going to drag on for quite some time. You can just see these, the MACD and also the stochastic, they are not ready to turn around at this point. So we have some room to the downside before we go further. And this is a really nasty looking inverted hammer here. So we probably gap down on Monday session and then continue towards the 50 moving average. The closer we get to the 50 moving average, the better actually. So this is still a trade that I'm looking forward to making. If we manage to get to the 50 and rally there, and then there is a possibility to buy it to 0.15 with a stop loss around here at 0.13. So let's look at cotton. We can see that it stopped its decline. I was hoping for it to decline to 0.7, and it didn't do that. We ran into support here, which were the previous resistance levels over here. So that's where it stopped. It's going to rally again, and at that point, I think it's probably going to test these highs again before we go down. There's some room to the upside in this market. Technical indicators are mixed at this point. MACD is bullish, the CCI is flat, and the CCI is flat, and the stochastic is also flat. So wait until it rallies up here. It probably break down towards 0.77, and that is basically the entry point for this market with a stop loss right underneath of 50 and a target here of 0.74. So let's look at cocoa. So as you can see, we have rallied all the way from 2.2 up to 2.8 and then declined to 2.7. But I think this rally here is technically a bunch of nonsense. We are still overbought at this point. We can see that there were a lot of sellers coming in when it reached up to 0.778 and pushed this back down. And at this point, I think that was the last hurrah we had in this market before we go lower in here, lower in this market. We can see that if you have the Fibonacci retracements, we are most likely going to go to these lows, 2.594 and 2.521 is probably where we'll enter for a buy. We'll have the 50 moving average moving slowly up this way, and that will basically coincide with this fall. So we'll move this and down here and then probably continue upwards after that. So this is still holding a short position here, and I don't expect this to rally. If it rallies above this, then we'll be even more overbought. I'll probably change my stop loss in order to adjust for that risk. But I expect this to go at least down to 2.5 for the first Fibonacci retracement, and then down to around the 50 Fibonacci retracement before we see any kind of massive support in this market. So look at wheat as the last one. We can see that we have rallied a little bit in wheat. This was also one of the trades that I lost on Friday. I was planning on entering Pallium and also wheat, but I was too late in order to enter this market. So it happens really fast. It gapped up and then just went completely bananas. There is still a possibility to enter this market. There is more risk that we may fall towards the 50 moving average again, probably a little bit underneath. But these technical indicators are looking very healthy. So this is most likely a market that is going to rally up towards 625. And if that breaks, then we go to the all-time highs here of 637. So it is possible still to enter this market for a buy, to target this with a stop loss underneath here. But that is still much riskier trade than the one that was planned. So hopefully somebody caught this and from the last video and started buying, because it will be probably be a very good trade. So hope you find this helpful. Good luck and thank you very much.